Hey traders, this is Scott Barkley. Just a quick video I want to show you on the 5 things a retail trader needs to pay attention to become a better trader. So I'm going to put my little face down so you don't have to look at me anymore, and we'll just check this out. All right. So I'm Scott Barkley, co-founder of ProAct Traders, and I'm a trader and trainer for over 2 decades. And I'm also the author of the book, The Empowered Forex Trader Strategies to Transform Pains into Gains. That's available on Amazon, right? So for the last 20 plus years, I've specialized in taking the complex part of trading and making it simple. And that's why I wrote the book, to help traders get it. I found significant ways to teach the banker's methodology, which is price action, by the way, and making it easy to understand. But simplicity in a complex environment only works if the trader commits to the process, does the work to gain understanding, and follows a blueprint for success. So let's cut to the chase here. Here are the 5 things that will make you a better trader. Understanding moving averages, MACD, even numbers due to options, fib retracements above the 0.382, and the average true range. All right, moving averages. Keep it simple and never trade a moving average crossover. All right, a moving average crossover is developed out of the stock market for their nice big old trends that they get that take years. All right, so the Forex does not trend. It has very large ranges, but it rarely trends. All right, and if you trade a moving average crossover when the market's not trending, it's trading suicide. All right, so forget about moving averages on less than a 60-minute chart. The big boys trade the higher time compressions, and unless they see it, it probably isn't happening. So if you got a moving average crossover, moving averages on your 5-minute chart, it doesn't mean anything because they don't see them. If you're under the moving averages on a 60-minute chart, then you have more sellers than buyers. If you're above the moving average, you have more buyers than sellers. If that is the big boys, then you're at least on the right track. So you can see here, I'm actually on my chart, which is the 10-minute chart, but I can do this here because we have superimposed the 240-minute moving average and the 60-minute moving average on this chart. And as you can see, right in here, they never went back. Only sellers, only sellers. You see that? All right. So it's a big visual. That's all it is you can look at it and say, I got more sellers than buyers. All right. So MACD. It's the key to the future. MACD is the only indicator that is leading. All else are lagging. So if you have a MACD on your charts, keep it. Anything else, throw it away. You want to know what the pair might do in the near future. So MACD is your key because it's not lagging. All right. So while it is only 66% correct, all right, that's on standard charts. Ours is 82, but yours is 66. Learning to understand it will help you immensely in figuring out the probability of your upcoming trade. Moving averages, histograms, and zero line are the key factors here. All right? MACD tells you when the strength of the currency is waning and a reversal or pullback is coming. That's called divergence. All right. So as you can see, same chart here, and you can see here when that currency moved out below those moving averages, what did MACD tell you? You were below the zero line, so you're officially a seller. All right, and the histograms kept following the candles. That's the key. Then the next trending move we have, or I shouldn't say trending move, it is a trending move, but it's down on a smaller compression. The same thing happens over here. All right, see that? All right, now over here you're seeing something different. The MACD is trending up while the candles are trending down over here. And because the candles are trending down, it is telling you we're going to reverse. So it's a very big hint in the charts. How about even numbers? Most people don't pay any attention at all to them. Now, options primarily use even numbers for the most part. A simple test on your charts will prove to you that you better respect them because the market is going to. Our rule is we never trade into an even number unless we're 17 or more pips away, and we hit that even number, we move our stop. That's all there is to it. All right. So I've already done this work for you. I want to show you. All you got nothing but over there on the right. You can see nothing but the even numbers: 6,400, 6,500, 66, 67, 68, 69. All right. They know it. 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 And they know it. I wonder if they respect zero lines. So here's the deal. You're trading, in this instance here, you're trading up. You get your signal right here. You're about to slam into the 6,800. Should you take that trade? Only if you're 17 pips or more away, and when you hit 6,800, you got to move your stop to break even because they respect these numbers. So just do it on your charts. Go take 4 or 5 charts. It'll take you all of 10 minutes to do that. Now, what about fib retracements above the 0.382? Well, pullbacks are manipulated moves by the big boys to find buyers or sellers. If they're going down, they run out of sellers. The only place to find sellers is to go up. So the pullback is my friend. If I'm a seller, I want them to find more sellers so that I can get to my target. They are continuation moves. All right. Now at the 214 Fibo, there is no reward for risk. But above the 382 and also at the 382, there is always reward for risk. All right. So once a pullback starts, the fib extensions also are now known. All right. So the only target that is next is the 1.270 Fibo. All right. Yes, your overall target may be further, but you have no idea if it can get there. Only that it is seeking the next big boy level. All right, so when you hit the 214, the next target is the 270, and you can see over here, you risk 1 to make 0.62. That doesn't work. You got to have at least a 1-to-1 risk to reward ratio. But you see at the 382, you're risking 1 to make 1.06, and everything after that is fantastic. All right. So at the 214 level, you have to risk more than the next part, and then the next target can reward you. And so you pass. All right, let's go see that live. All right, so you see I've got the leg and this right here, and right here is the 214. Okay, now once you put a fib on, you're outside where you put your stop is above the 786. All right, now let's just see what that looks like. If I traded the 214 to the 1270 right there, okay, there's my reward. Here's my risk, 5 to 7 pips above that. So you can quickly see that the reward is greater than the risk. All right, I can't make that trade. Not if I'm a trader. Now, if I'm a gambler, I can do anything I want to, but that's not trading. Now, at the 382, if I traded the 382 to the downside, there's my potential reward, and here is my risk. You see how quickly it changes? All right, see, so any pullback above the 382, when you see it turning, close in reverse is a good example here to the downside, that means they're trying to continue. And you can do these all over the place here. And of course, the targets will stay intact. All right, so let's just do this first one right up here. We'll go from the swing high to the swing low. And you can see that one, that's at the 618. The 270 is the next target right there. The 618 is the next target, and the 1270 was the target all along. Now, you knew that back up here if you're a trader. All right. Now, the key is I do not take any pullback only to the 214. I only take it if it's above the 382. Go do 50, 100 on your charts, and you'll prove it to yourself. All right. Last but not least is the ATR, stands for the average true range. It's the next 24-hour period day chart candle before it happens. And the New York fix is when it starts over. So every day at the New York fix, you get a brand new ATR. You say, well, I got a cool little tool here. Yeah, I got a tool, all right. But you can still put it on your trading view or your MT4, whatever you're using. You just put an ATR. Now you're going to have to do the work. Okay, we create software to do the work, but you're going to have to do the work. All right. So for instance, let's look at this Aussie New Zealand. Okay, we used the 14-day period. 66 pips is what it does today. That's what it should do today. Now, that means it's strengthening because last week it was only doing 57. And notice that its normal 90-day and 100-day is 74 to 76. So we're working our way up to this 74 and 68 pip area right here. But today we would use the 66 pip as our target from the New York fix yesterday. All right. So I'm going to go in the charts here. All right, so let's still take a look. Here's a pound dollar. I already did these ahead of time, so we would save some time here. All right, so here's the pound dollar. Its ATR is 82 pips. Here's just the 5 o'clock candle yesterday, the New York fix right there. And yesterday at 5 o'clock, I knew that the currency had an opportunity going directly up or down, 82 pips. Where did it go? I'll just prove it to you right here. Where did it go? 82 pips, all right? To the pip on the pound dollar. Let's take a look at the dollar Swissy, which follows the dollar index here, okay? Now, because the dollar was really strong today because of a fundy, it blew through its ATR, but it still did its ATR. And you can see that the ATR down here is 62 pips. That is 62 pips from the New York fix yesterday. 62 pips. See that? All right, let's look at the New Zealand dollar. All right, so New Zealand dollar yesterday at 5 o'clock. All right, New Zealand dollar right here, 57 pips. All right, 5 o'clock is right here. All right, there's 57 pips. Just to prove it to you, I'll pull this open. Oh, wait, it should be 57. Ooh, wait a minute, I missed that one. All right, there we go. How about that? It's even better. Right to the pip to it. All right, you think they know where that is? They know it yesterday. They started trading to it. All right, what did they do? They went down. Why did they do that? Find enough buyers to go there. Oh, that's a pullback. That's right. It's my friend. All right, over to, let's look at pound Swissy. Nice little exotic here. All right, and here we go. Pound Swissy, 56 pip ATR right here. And where do we go? Right down to it. All right, and once again, I'll prove it to you that that's what it is. 56 pips. All right. So one more, how about the EJ and a little rocker here? Okay, so here's the EJ to the downside. And you can clearly see here that there's the target, all right? The target was at 98, and where did they stop? They stopped here at, excuse me, that's at 94. So they missed it, they did do 98, and the target was at 91. All right, so they missed it by 3 pips. That's all right? But they knew that back up here on the turn at the top of the channel, all right? Had you been in there, had you known the ATR was there, yeah, oh, they're pulling back. That's my friend to keep it going. They're pulling back, okay? They haven't hit it yet, so they could still make this move to the downside, all right, today. And at 5 o'clock today, if they do that, this whole thing right here will be the day chart candle. All that movement, up, down, sideways, whatever it does, is going to be the day chart candle at the end of the day. So we've trained bank traders, hedge fund traders, prop traders, full-time professional traders, but most of our traders are just trying to supplement or replace their income in the fastest way possible. This is why we do things like these videos, to help you get there faster, all right? Our teaching programs and over 200 videos are designed to do just that. And of course, you can download the book on Amazon and you'll get a nice little Kindle book where you can open up and see the graphics and make them full screen. We have proven methodology and we have award-winning software. We also have a great community of traders, and some have been with me since 2005. So we'd love to have you watch us do this in real time in a live room. Just go to proacttraders.com, take a 10-day test drive, and you'll see traders making hundreds, if not more pips, doing what this video is about. So it's free, all right? So don't forget to like us, subscribe, and share it. And if you subscribe, you'll get notified when I put another video up. It's pretty simple. Hope that helps you, everybody. Have a great day.